Hello everyone, welcome to lecture 5 of module 11 in which we are going to deal with the projected cash flow statement in the terms of numericals using indirect method. In this way, we are going to project the cash flow statement using all the three steps that we have used in the previous lecture also when we prepared the cash flow statements. First, we go with the projected cash from the operating activities, then we go with the projected cash from the investing activities, and then we find out the projected cash from the financing activities. And then taking into consideration the last year profit, we will try to find out the projected cash required for the next year or the projected cash flow for the next coming year or the year in which we have to make the projections. To start with the question, this is the first practical problem related to the same, that you are required to prepare a projected cash flow statement for the year 2023 using indirect method from the following information. And the information is given that P Limited made a profit of rupees 1,85,000 for the year ended 31st March 2022 after treating the different items as mentioned below, like depreciation, transfer to reserve, goodwill written off, loss on the sale of plant, and the profit on the sale of investment. Then we have been provided with the balance sheet, as you can see in the next slide, and we are also given certain adjustments to be taken care of while projecting the cash flow statement. So we are moving with each and every item, going step by step. To start with, first I will take up the step 1, in which we are going to find out cash flow from operating activities. We are just applying the indirect method of computing the information. So first we are given in the question is a profit of rupees 1,85,000. So we take this net profit as given in the question itself is rupees 1,85,000. Then we make the different adjustments in the same with regards to non-cash, or we call it non-operating items. So go with the information provided. First we are given depreciation on plant, 30,000 rupees. Then we are given goodwill written off. As you know that these items are to be added, that is 12,000 rupees. Then we have loss on sale of plant, 8,000 rupees. Transfer to reserve, 20,000 rupees. And then profit on sale of investment, that is 10,000 rupees. Let me make a mention that loss on the sale of plant is to be added back while computing the cash from operating activities. So that is to be added here, rupees 8,000, and the profit is to be deducted for the information. Now, after taking all these items into account, inclusive of the net profit as given, we can calculate the operating profit before working capital adjustments, which is rupees 2,45,000. Now we are going to make the adjustments with regards to the changes in working capital. So we are given as per the information in the question, that the creditors, bills payable and bank overdraft are the current liabilities are expected to increase by 10%, stock is expected to increase by 20%, and debtors are expected to decrease by 7,000. So now we consider all these items into account. So first we deal with the increase in creditors, which is 10% of 65,000 as given in the balance sheet. It would be 6,500. We know that the increase in the current liabilities is to be added. So we will add this. Then again we are given another increase in the current liabilities in the form of bills payable, 10% of 40,000, that comes to rupees 4,000. Then is increase in bank overdraft, that is 10% of 47,000. And after that we are given increase in stock. As we have added the increase in the current liabilities, so it is obvious that we will reduce or we can subtract the increase in the value of stock, which is 20% of 80,000. So we will deduct this item of 16,000 here. And the last we are given the decrease in debtors. So as we added up the other items, we will take the decrease in debtor to be added into the working capital adjustments, that is of rupees 7,000. So after considering all these things, we find the net change in working capital items is 6,200. Now we can calculate cash generated from operating activities, operations, as there is no income tax paid in this question. So we will directly go with the total of 2,45,000. Then we add up 6,200. So we reach the figure of 2,51,200 rupees. 2,45,000 plus 6,200. So we got the figure of this. Moving to next. The next step is to calculate the cash flow from investing activities. As you can see in the question, adjustments are provided that the company is expected to purchase a plant of rupees 1 lakh. So this expectation is required to be treated here in the investing activities in the form of purchase of plant. As you know, if we are going to make a purchase of the plant, it means to the outflow of the cash. So we keep it in a negative term. Then the further adjustment is given that there is a loss on the sale of plant of rupees 8,000 and the amount realized is rupees 50,000. So here we take sale of plant as given in the adjustment of rupees 50,000, and then further one more adjustment is given that investments worth rupees 50,000 sold at a profit of rupees 10,000. So here we take the sale of investments which was 50,000 worth at a profit of rupees 10,000. So the total figure comes to 60,000. So now we can make the calculation of cash from investing activities, and we got the balancing figure of 10,000 rupees here. Then next The step 3 is the calculation of the cash flow from financing activities. This information we can find out from the adjustments that is given in the form of additional information, and you can see that the company is expected to raise an additional share capital of rupees 50,000. So mean we are going to have financing activities in the form of issue of share capital worth rupees 50,000. And you can see that we have treated all the adjustments given in the question, so nothing is left. So we calculate the cash flow from financing activity, which is going to be 50,000 rupees. So we have computed all the three components of the cash flow statement. Now we can find out the net increase or decrease in the cash. So first we computed net cash flow from operating activities, which was 2,51,200 rupees. Then we computed net cash flow from investing activities, which was 10,000 rupees. That is a positive figure. So last we computed net cash flow from financing activity, which is 50,000. So we get that there is net increase in cash would be 3,11,200 rupees. So now we can have the net increase in cash, which is 3,11,200. We just computed in the last slide. Then we have the cash balance in the balance sheet provided to us rupees 50,000. Opening cash, which is given on 31st of March 2022, is 50,000. So we have projected cash balance 3,61,200 rupees. This is how we solve this problem. Moving ahead to the question number 2, in which the similar kind of information is provided along with the balance sheet and the additional information, so that we can treat each and every item one by one. To start with, now I think you are in a position to calculate the different things. So I'm directly going to prepare a statement using all the steps. So the first thing we compute is cash flow from operating activities. Cash flow from operating activities, in that we take into account the different items and the amount to be taken into account. So the first is information regarding net profit, which is given in the question. Net profit, we take it as a net profit before tax or extraordinary items. So this is the figure we treat here, that is the net profit, 2 lakh rupees. Then we first go for the adjustments. These adjustments for all the non-cash as well as non-operating items. as you can see in the question that we has given depreciation, provision for taxes, goodwill written off, loss on sale of building, loss on sale of investment, and you are also given the depreciation. So we treat each and every item one by one. The first we go with the depreciation, which is given on machinery, 45,000. It would be added back. Then we have the goodwill written off, that again to be added, goodwill written off. Then the third item is provision for taxation, which is 25,000. Then we have goodwill was of rupees 15,000. Provision for taxes 25,000. Then we have another item of loss to be added back, loss on sale of building 18,000. Then we have loss on sale of investment, that is 10,000. If we treat all these items up till now, this will be our operating profit before working capital adjustments or working capital changes, that is 3,13,000. So now in the next step, we are going to make the adjustments for working capital changes. The first we are given in the adjustment that the stock is expected to increase by 10%. So as I have told you that any increase in the current assets will be deducted and decrease in the current liabilities will be deducted. So we take increase in stock, which is given 10% of the value of the stock is 1 lakh. You can see in the balance sheet. So it would be 10,000 rupees to be deducted. Then we have increase in debtors, rupees 17,000. Then we have decrease in creditors, which is 20% of 80,000 rupees, that comes to 16,000. And then we have another decrease in bills payable, 20% of 30,000, that is 6,000 rupees. So we can compute the net change in working capital is 49,000 rupees as such. So we can compute cash generated from operations. That would be the total of the two things. One is the 3,13,000 minus 49,000, and it is in the negative item. So we got the amount 2,64,000 here. So the next we are going to make the adjustment for the taxes. So we will deduct taxes. These are the taxes which are given as a provision for taxes. Assumed that provision is being paid, that is of rupees 25,000. So the net cash flow from operating activities is 2,39,000. Moving to the next step is the cash flow from investing activities So as per the adjustments given, we will treat each and every item regards to the sale of assets, purchase of assets. So first we are given the sale of building for rupees 40,000, this to be added back. Then there is a sale of investments given as a last adjustment. There is a sale of investment at a loss of rupees 10,000. So we take up the 50,000 rupees, and then there is a purchase of machinery. It is to be deducted 50,000. So we get net cash flow from investing activities, which is going to be 40,000 in positive terms. Then the third is the computation of cash flows from financing activities. As you can see the various adjustments given in this question, there's nothing is mentioned about the change in the financing activity, so we assume it to be 0. Going ahead, now we are going to form the projected cash. So for that we will take up the cash, or we can say the net change in cash, net increase or decrease in cash. First we compute this. So we take the cash from the operating activities, which we just computed. Cash from operating activities, rupees 2,39,000. Then we computed cash from investing activities, that was rupees 40,000, and there was nothing called the financing activities, so it would be taken as 0. So the total of the cash would be 2,79,000. This is showing the net increase in cash, and from the balance sheet we can take up the opening balance of cash given on 31st of March 2022, amounting to rupees 70,000. So the total projected cash is 3,49,000. This projected cash applies for 31st March 2024. Now the third practical problem. In this practical problem, we are supposed to prepare even one information regarding the projected income statement, because we are given the different informations with regards to that. In the first step, we are going to calculate the projected income statement, or we are going to prepare the projected income statement for the year 2024 using the base of percentage of sales method. So I'm going to take up the different items and putting up their percentage, and we are going to make the projections for 2024. So here we put the projected figures for the year 2024. Here we have the amount given for the year 2023, which is our base year, and here we are calculating the percentage. So the first item provided is sales, which is given 7,40,000. for the year 2023, and in adjustment it is mentioned that the sales are going to be expected to be 10 lakh rupees in the year 2024. So going with the items which is given as it is in the question, so we take up the other income which was given 50,000. If we calculate the percentage, it will become 7.14% of the sales of the year 2023, and we compute it for the 2024, so it comes to 71,429 as it is an approximated figure. Then we have direct material cost, which was given 2,50,000, 35.71%. So it comes to 3,57,143. Then we have wages of rupees 1 lakh, which is going to be 14.29%. So it would be 1,42,857 is the exact amount. Then we have manufacturing expenses, which is given 60,000 rupees, and the percentage is coming to 8.57%. So here it would be 85,714 rupees. Manufacturing expenses, and then we have the office expenses. Office expenses amounted to rupees 50,000. The percentage would be 7.14%. So it would be 71,429. Moving ahead with the other items available, that is the depreciation, that was 25,000 for the year 2023. It is 3.57% of the sales, and for the year 2024 it would become 35,714. Then we have interest charges or the interest cost amounting to rupees 30,000. The percentage is approximately 4.285. So it would become 42,857 rupees. Then we have profit before tax, which would be 2,35,000 for the year 2023. 33.57% comes to 335,714 rupees. Out of that we deduct the tax, which was 30,000, around 4.29%, 42,857, and in the last we can calculate the profit after tax. After deducting the different items, we got the figure of 2,05,000. If I compute its percentage, it would be 29.29%. So for this year, it would be 2,92,857 would be the exact amount for the year 2024 after the projections. Moving to the next step, we compute the cash from operating activities considering all the adjustments provided in the question. So we are calculated just profit. Here we will take into account the profit before tax, which we just calculated for the year 2024, rupees 335,714. That would be considered, and then we add up the non-cash and the non-operating items to it, in which we have been given the depreciation in the question, which would be 35,715. Nothing more is mentioned, so we can compute the operating profit before working capital changes, that is going to be 3 71,428 rupees. Now we calculate the changes in working capital. We have the stock that is showing increase by 5%, means 5,000 rupees. Then we have decrease in trades payable, which is 10,000 rupees, and we have increase in debtors 2,500. As you can see, all these items are required to be deducted. So we reach the figure of cash from operations, that would be out of 3,71,428, we deduct these three totals of rupees 17,500 and we get the cash from operations amounting to rupees 3,53,928. Now we are given one more information regarding the tax paid. So we deduct that tax paid out of it, 42,857. So our net cash from operating activities will be 3,11,071. Now moving to the next step, that is cash flow from investing activities, and we can see that there is an addition in the fixed assets by rupees 2 lakhs. This 2 lakh will be our balancing figure, which we show as a net cash used in investing activities. The next step is cash flow from financing activities. Here we are given one information regarding the repayment of long-term loan, 50,000. Then we have increase in share capital, rupees 3 lakhs. We also paid interest in this question, so that is going to be deducted 42,857 rupees. So now we in a position to compute net cash from financing activities, which would be 2,07,143. After taking into account all these things, we can find out the net increase in cash, 3,11,071, deducting 2 lakh rupees, adding 2,07,143, we reached the figure of 3,18,214, which shows the net increase in cash. And after that, we will add to it the opening cash balance of rupees 60,000 into the 3,18,214. We reach at the projected cash for the year 2024 happens to be 3,78,214 rupees. That's all from my side. I hope now you will be in a position to project the cash flow statement using different methods, mostly the indirect method, and you can also project the income statement as well as the balance sheet after using the information provided in this module, module number 11. Thank you so much for your kind attention.